You're listening to the Multifamily Marketwatch for Washington State. Apartment owners who need to know, trust HFO, the leading source for multifamily industry news around the state, from Puget Sound to the Tri-Cities.
Welcome back to HFO's Multifamily Marketwatch for Washington State. I'm your host, Aaron Kirk Douglas. This Washington Multifamily Marketwatch is co-sponsored by Gantry Inc., the nation's largest independent mortgage broker, and by J.R. Johnson, experts in multifamily restoration and repair work. The eviction moratorium that have been all over the United States for so long are now beginning to expire. There is one set to expire this week in Oakland, California, signaling the end of an uncertain period for many landlords there. Tenants are obligated to start paying rent next month. Even though tenants maintain eviction moratorium have been instrumental in keeping them housed, some landlords have voiced concerns about a looming crisis. They fear drowning in debt and are anxious about the potential threat of foreclosure. One black landlord from San Francisco who owns a single-family residence there narrated her ordeal. Her tenants owe her over $60,000 in back rent, which she knows that she may never see. With no option until now to evict her tenants, she faces the bleak prospect of foreclosure. And she is not alone in this predicament. Many landlords nationwide, overwhelmed by the financial hardships of these moratoria, have exited the rental business. Others have reinvested in areas with more promising fundamentals, stable job markets, or places with less governmental regulation. But it's not just individual landlords feeling the pressure. The broader rental market is also exhibiting signs of stagnation. Apartment List has reported that the national year-over-year rent growth was flat for the 12-month period ending in June. This marks a major shift from the past when annual rent growth topped out at nearly 18% nationally and soared to over 40% in some popular cities. As a result of this slowdown, the rent component of the Consumer Price Index has finally peaked and is beginning to decline. However, the Yardi Matrix outlook is cautiously optimistic about rent growth, though it foresees upcoming challenges. Factors such as potential economic downturn and rising interest rates could dent that positive outlook. Speaking of distress, we look to the Puget Sound area where two multifamily properties face the threat of foreclosure auctions. The developers of the 115-unit Tacoma Tracks apartments in Tacoma and the 157-unit Madison Plaza apartments in Kent hope to raise the necessary capital to prevent these auctions. However, it's not all doom and gloom. On a positive note, on July 5th, the Seattle City Council cut some red tape for new affordable housing developments. This move is expected to expedite the development project, reduce expenses, and foster the creation of around 725 new housing units annually. They will allow those affordable housing developments to bypass the design review. In other news, the Urbanist has posed an interesting question. How many homes could be created if cities in Puget Sound legalized denser housing near transit stations? According to a recently released tool from the Urban Institute, zoning reforms could facilitate the creation of 28,000 more homes near transit in Bellevue alone. Unfortunately, a bill encouraging transit-oriented development failed to pass out of the 2023 Washington legislature. A recent survey by the Northwest Progressive Institute of 651 likely special election voters in Seattle found that 65% of those polled approved six-story buildings geared towards low and moderate income folks. The approval rate for ADUs, triplexes, fourplexes, and townhomes ranged from 70 to 80%. Those favoring development approved building in any of these configurations in any Seattle neighborhood. Only 30% of those polled opposed such housing projects, while 5% were unsure. In economic news, Bankrate has ranked the Seattle metro area as the second best city in the U.S. to kickstart a career. Although Seattle scores high on quality of life and employment opportunities, its affordability is a slight drawback. Moving on, the Aria apartments in Redmond have been sold to a Bellevue company for a whopping $46 million. This 102-unit project was sold for approximately $450,000 per apartment, with rents there ranging from $2,300 to $5,200 per month. And finally, SRM has some big plans underway. They're starting construction on a low-cost apartment building south of Bellevue off I-405 this month. Funded by a $38 million construction loan and supported by Microsoft through its affordable housing initiative, this 5-story, 135-unit project aims to provide below-market rents to the community. Stay up to date with the latest from the Washington State multifamily industry by following our blog at hfore.com and by subscribing to the HFO Multifamily Market Watch podcast. Thanks for listening. We'll be back next week.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information. HFO is an affiliate of the Global Real Estate Advisor Network.